It's crashing the crypto markets already, and the selling, it hasn't even begun. I mean, it's no longer just FUD, as the mt.gox trustee has begun the process of paying back the creditors. The main question now becomes, will they sell? And if so, what will it do to Bitcoin's price? Well, that's exactly what we'll be answering today. So, don't go anywhere. Before unlocking the Gox Pandora's box, there's a disclaimer I need to drop. Nothing in this video is financial or investment advice. It's purely educational content meant to inform you. So please consult your financial dude before making moves in the crypto market. So with that out of the way, let's jump in with a bit of an overview. Now, it's safe to assume that most of you probably know what mt.gox is. But in case you don't, here's a quick TLDR. 10 years ago, it was the world's largest cryptocurrency exchange until it collapsed in a hack. Between 650 to 800,000 Bitcoin was stolen over several months, and it led to the exchange being insolvent and declaring bankruptcy. As a result, there were tens of thousands of users that were now unsecured creditors. The bankruptcy process has been going at a painfully slow pace over the years, but it has finally come to a crescendo, grand finale, the final showdown, if you will. And that's because earlier this year, the trustee in the case has stated that they are ready to start disbursements of the over 140,000 Bitcoin that was recovered. Needless to say, that's a lot of Bitcoin, a $7.9 billion worth to be exact. And if all that Bitcoin is sold all at once, it could completely melt through most of the order books, potentially sending Bitcoin on one almighty dump. But whether that will happen depends on a few factors, and those factors are driven by a few questions that need to be answered. Firstly, when exactly will all of these coins land in the wallets of the creditors? Secondly, who exactly are these creditors? Thirdly, will they of course sell? And last but not least, how much could this impact on the markets if they do? Let's dive into it, shall we? So, when are these coins going to be sent to the creditors? Well, it could still take some time, and that's just because of the way that some of these claims were filed. On the 5th of July, the trustee announced that they had started to make payments to, quote, some of the rehabilitation creditors. Indeed, at about the same time, large movements out of the mt.gox wallets were made, 47,229 Bitcoin to be exact. Now, some of these went to other exchange claim addresses as well. The reason for this is that the trustee gave the Gox creditors the option to receive their coins in specially designated crypto exchanges. And soon after these movements had happened, there were a number of posts on Gox forums from users who said that the funds were distributed to them already. So it's clear that the funds are being sent. However, what isn't as clear is when the rest will be distributed. And that's because at the time of shooting this video, according to Arkham Intelligence at least, most of the coins are still sitting in cold wallets. And this ties into something else that was said in the announcement letter by the trustee. And that's that the rest of the payments are likely to be made when certain conditions are met. And you can see exactly what they are over here. At the end of the document, the trustee says, quote, we ask eligible rehabilitation creditors to wait for a while. Now, according to reporting by the block, that while can be anything from 30 days up to 3 months. And that's just because the various exchanges and custodians where these claims were filed may have their own very specific criteria for paying out these creditors. Then, if that is coming in the next few weeks, the question turns to whether they will sell, hodl, or perhaps something in between. But in order to determine that, it's important to delve into the exact profile of who these creditors are. And that's just because the type of creditor will impact on whether they are likely to hit that sell button and how quickly they're likely to do it. So, who are these creditors? Well, I will get onto that in a sec. But before I do, if you want to help others see this video as well, then help out by giving it a boost with a like. You may also want to subscribe and ping that bell as well. because there's lots of exciting videos coming your way.
So, ma'am, where exactly were you on the night of the murder?
I was right here, Detective, all night long.
You got anyone who can back that up?
You mean an alibi?
Yeah, that's the one.
No, I was all on my lonesome.
And what exactly were you doing all on your lonesome, if you don't mind me asking?
Well, keep it under your hat, Detective, but I was looking through the Coin Bureau Deals page.
What's a Coin Bureau Deals page when it's at home?
It's only the place where you'll find the best discounts and promos in all of crypto.
What do you mean?
I mean, trade-in fee discounts of up to 70% and sign-up bonuses of up to $100,000 on some of the best exchanges.
Holy smokes! They got discounts on hardware wallets too, by any chance?
They sure do, Detective, like you wouldn't believe.
Well, that sure sounds kind of swell, lady, but just you give me one good reason why I should believe a single word you say.
You don't have to take my word for it, Detective. Take a look at the link down below and see for yourself.
She wasn't kidding. Those deals really were something else. Turns out that crypto ain't such a bad place after all. You just gotta know your way around.
Anyways, back to the creditors. Now, one of the best indications of the composition of these creditors is in a research report from 2022 conducted by the Blockchain Research Lab. I will leave a link to it in the description for you guys to come back and read at your leisure. But what it basically says, in simple terms, is how concentrated these claims are, i.e., most of the total value of these claims are held by a very small subset of investors. You can see exactly what that looks like over here. The bottom 50% hold just 1.3% of the claims. And on the opposite end of the spectrum, the top 1% hold, and get this, over 50% of the claims. So, in other words, just 226 creditors hold more than the rest of the 24,500 creditors combined. But who are these whales? Well, Japanese bankruptcy law protects the identity of creditors in cases like this, so we can't know for certain. However, over the years, a number of these claimants have themselves disclosed that they hold these claims. The first of these is the Mt.gox Investments Fund, or MGFI, which was apparently the largest creditor. According to a Bloomberg article from last year, the fund had bought these claims over several years. However, the exact amount of the claim that the fund owns is not really known. Then, back in 2021, Bloomberg also reported that Fortress Investment Group was buying the claims from creditors. At the time, it was buying these claims at 80% of face value, which was the highest level they had been trading at up to that point. That same report also pointed out that Fortress had been buying the claims for years and had started buying them for as low as $600 per Bitcoin. Then there is a US tech company called CoinLab that was one of the original partners with Mt. Gox. According to numerous reports, CoinLab was pursuing over $170 million in Japanese courts. What's important to note about this, though, is that the claims seem to relate to a commercial agreement and not because they were users and creditors of the exchange. The company also seems to have been dissolved since then. Another defunct company that had claims on Mt. Gox was Bitcoinica. Now, this was a New Zealand-based exchange that was also hacked and declared insolvent. Now, the amount of the claims that were disclosed in its bankruptcy filing were about $29 million. Then, of course, there were a number of large individual whales that could have had their own claims against the exchange. For example, Jesse Powell, who is the founder of Kraken, actually worked at Mt. Gox as a consultant. He also tried to get the exchange back up and running in the immediate aftermath of the hack and also set up that Kraken claim window. There is also Jed McCaleb, who was actually the original founder of the exchange. And last but not least, Bitcoin Jesus himself, Mr. Roger Ver. He claimed to have lost 577 Bitcoin on the exchange, although I seem to think that the Gox claims are the least of his worries right now. Now, of course, this picture may have changed considerably since this was disclosed, and that's just because there was such an active claims market. They actually started trading way back in 2017 when an attorney created the mt.gox claim website. And in the same year, it was reported in the Financial Times that there were numerous funds that were trading these claims. But what this data tells us is something very clear. The majority of the claims most likely were bought by investors and funds over the years. And these investors now need to make a decision of what to do with the coins when they are sent. So, will they sell or won't they? Well, that really depends on the state of the investor or creditor. For example, if they were one of the companies that went bankrupt since mt.gox went down, then they are most definitely going to sell. On the opposite end of the spectrum, the large individual whales that have claims will be less inclined to do so. And that's just because they have been holding on to these claims for so many years. They clearly aren't desperate for the money. Remember, there was an active claims market, and they could easily have sold these claims if they really needed the liquidity. So these diamond-handed types are likely to continue hodling their coins, especially if they were the early adopter kind. They know the long-term value of Bitcoin. This isn't just speculation. In a tweet thread that I wrote about 2 months ago, I referenced Reddit polls that were conducted on several of the mt.gox forums. In these polls, many plan to hodl their coins. And I also got numerous comments from Gox Creditors to that effect in a video that I did around the same time. So, it's clear that the broader individual investors are likely to hodl. But the biggest wild card is what those large funds who had been buying those claims will do. And let's not forget, their thesis was to buy the claims, hold the risk, and arbitrage the gains on a full payout. In order to bank their gains, they will have to sell these coins. However, they may also decide to mark-to-market their gains and let their Bitcoin positions ride to Valhalla. Indeed, MGIF, which as you know is the largest creditor, also disclosed to Bloomberg last year that when the claims are paid, they don't plan to sell, which is encouraging. Having said that, this was back in March of last year when Bitcoin was trading at slightly above 20K. Things have changed considerably since then, and the fund will have to make the same determination as all of us are making right now. Where is the price going? In my opinion, it would be foolish to think that there aren't large funds out there that are looking to close out their trades and bank their profits. This is especially the case if they weren't your traditional crypto investor type, Sea Fortress, for example, as they only played the bankruptcy trade. It would kind of go against their mandate to hodl Bitcoin exposure after the payout. It's not just me saying this. Analysts at JP Morgan have also said that they expect these creditors to start taking profits on disbursements. John Glover, who is the CIO of crypto lending firm Ledden, also told CNBC the windfall from these claims would translate into Bitcoin sales. So, if there is going to be this selling, it naturally leads to the final question that we outlined right at the beginning. How will it affect Bitcoin's price? Well, there are two components here. The first is the FUD around the selling, and the second is the selling itself. Sometimes the former can be more impactful than the latter. Indeed, the price action that we have seen over the past 2 months is testament to that. People will sell if they think that there is the prospect of selling coming. This includes both the spot sellers as well as those who hold the ETF shares. However, this also came at a time when the German government was dumping their Bitcoin holdings, so it could have been, FUD overload that drove the markets lower. When it comes to the actual selling itself, many seem to think that the market can absorb it, and that's for a few reasons. The first is the fact that large holders of these coins are likely to look for buyers in the OTC market, and that's especially the case for funds that are looking to limit the price impact of their selling. As you no doubt know, OTC trades don't impact on public order books and are therefore likely to have less of a significant price impact. But let's assume that the OTC route isn't taken. Some think that there is still enough liquidity in the markets to absorb the pressure of large-scale selling. And that's exactly what James Butterfield of CoinShares told CNBC. Quote, liquidity is sufficient to absorb these sales over the summer months. Another analyst from CC Data reiterated that point and also highlighted that a large majority of the claim buyers opted for early repayment with a 10% haircut. That's actually something that MGIF has also opted to do. Therefore, it's likely that a portion of the coins that are available for distribution may not be sent with this initial batch, something which could help to reduce the selling pressure. Hey, every little helps. So then, does this mean that we are out of the woods? Much ado about nothing? Not quite. You see, as mentioned, sometimes the FUD around an event can impact the price more than the event itself. In this case, rumors of large transfers and selling could cause the price to fall, which could cause those creditors to be more skittish and force their hand to sell. It could create a self-fulfilling prophecy. And that says nothing about the impact of leverage and ETF flows, which of course could exacerbate that price action. The market is already quite skittish right now, and sentiment, it's not looking too hot. Therefore, it's more than likely that large transfers to exchanges and their concomitant sell orders could drive the price lower. However, I think that this is likely to be short-lived. It's not like the Bitcoin market hasn't faced large sell pressure recently. Let's not forget those grayscale GBTC flows that saw a total of $18.6 billion flowing out over a few months. That's considerably higher than that of all of the Mt. Gox coins. And that's also assuming that all of the coins from Gox will be sold, something which I elucidated earlier is very unlikely. And there is one more variable here that you need to consider. And that is the fact that it's not just Bitcoin that is being distributed. It's also an equal amount of Bitcoin Cash. And that's because the Gox bankruptcy happened after the Bitcoin Cash fork. So if those creditors are really looking for liquidity, then they can just dump their Bitcoin Cash. Not to cast any aspersions at the die-hard Bitcoin Cash holders out there, but if I was a Bitcoin OG, that's the first thing I would dump before considering touching my Bitcoin stack. In fact, a Bitcoin Cash short could be a decent hedge if you really wanted to protect yourself from the short-term Bitcoin FUD. Not financial advice, DYOR, and all of that. And that's it for my video today. But of course, it's not complete without your all-important feedback. So, what do you think of the Gox FUD? Will the market digest the selling, or will it send us back into a bear market? Let me know in those comments down below. And of course, if you like this vid, then like this vid. Give me a sub if you loved it, and ping that bell as well if you want to see more. Thank you very much for watching. Nick, out.